Saturday, July 1st, 2017, Monaco 64, home of alternative economics and contrarian views. So I like to look at the dollar index today and gold and silver, and why I think the correction we've had in gold has been a very, very strong correction. And by that I mean compared to the dollar index, and the bottom that the dollar index made in 2008, gold, when the dollar bottomed in 2008, gold went to 1,031, and now we're at 1,250 almost. And the dollar index, has gone from around 70.68 to be exact, all the way, to above 100, and gold is still above 1,031. So the correction in gold, yes, has been painful if you look at the top in 2011, but technically, if you consider gold to be the anti-dollar, the top in gold, in terms of the bottom in the dollar, was actually in 2008. So we've had a 10-year correction in which gold has actually gone up. And the reason why I'm talking about this is because Ron Rosen, he's been in the markets over 50 years. And a lot of times 321gold.com puts out his stuff, his technical analysis. And I've subscribed to Ron Rosen. I don't anymore. But he talks about a running flat correction in gold. And he basically says that the top in gold, in terms of the dollar index bottom, was 2008 at 1,031. That was in March. I think that was on the day that Bear Stearns, had to be saved by JP Morgan. I remember that day well. I was in the market still at work in the city. And yeah, 1,031, and then we corrected down to like 685, I think that was the low, and then we went all the way from there, all the way to 1,900 in 2011. But in 2011, the dollar made a low that was above the 2008 low, and despite that, gold went even higher. And since 2011, the dollar has gone from just above 75 to, above 103 late last year. Yes, and gold has gone down from 1,900 to 1,200. But the move we had from 08 to 2011 was a very, very strong move, because the dollar actually, if anything, had gone up in terms of the dollar index, and gold zoomed up. So I expect now, once the dollar resumes its move down, that gold is going to go ballistic, because according to Ron Rosen, a running flat correction, which is what we've had in gold, is very strong correction. So a running flat correction is when the correction actually forms, well, the correction is in a bull market, but the correction is actually higher than the previous high. It seems a bit weird, but that's what we've had in gold. And I wanted to talk to people about that. I know there's frustration with how long this correction has lasted, 2011 from the 1900 high, or 2008, from the dollar index low. Of course, there is some short-term manipulation, but I think the gold bull market is still alive and well. So I'm going to start with the charts now, and I'll look at the dollar index here. So it's a 20-year chart basically, and you can see here the high in July 2001 was 121 on the dollar index. And from that period all the way down to 2008, March 2008, basically the dollar went almost down in a straight line from 121 to 70.68. That's when gold went from around 254 to 1,031. So that's the big move there. And then you can see that the dollar index went up from that low. That was the top in gold at 1,031, and in March 2009, dollar index went up to 90, and then it came back down into end of 2009, went back up, and then it made another low in 2011 below the 09 low, but didn't make a new low below the 2008 low. The low in 2011 was at 72.69. That's when gold went to 1,900. So that was a huge move by gold. And since then, the dollar has rallied from 72.69 all the way to 103.82. And gold, of course, dropped from 1,900 to 1,045 in the meantime. And now we are at 1,200. But if you look at it, the dollar index is way above the 2008 low, which would mean that gold would have to be below 1,030, but we're not. We're at 1,250 almost. 1,241 we closed yesterday. So if anything, gold has held really well. And I've put some retracements here in this chart. You can see the Fibonacci retracement from the high in the dollar in 2001, the low in 2008. Notice how in the last couple of years or year and a half, end of 2015 till now, we've basically been consolidating between the 50% and the 61.8% retracement. The 61.8 retracement is really important. It's the golden mean, Fibonacci golden mean. And look how, you know, we went up above that retracement a little bit late last year, but now we're coming back down. And we even closed on Friday below the 50% retracement of 95.89. Dollar index closed at 95.62, as you can see there. Actually, let's see, closed at 95.62, yeah. So the dollar index doesn't look very good. I think we're ready to move lower. The next support that I have is 94 and then 92.50, and you can see there that the 90 level is also 89.94 to be exact. That's the 38.2 retracement, which is the equivalent you know, of the 61.8. That's very important as well. And you can see that that 38.2 was really important back in March 09. That was the top. So that's going to be really important, that 90 level in the dollar index. So now I'm going to bring up a gold chart. Let's have a look here. And that's also, you know, about 18-year-old chart, 17-year-old chart. And you can see there, it's a weekly chart. And I've done the retracement from that low was in February 2001. So just a few months before the top in July in the dollar index. And you can see that gold goes from 254 all the way to 1,031 there in beginning in March 2008. Then it corrects down to just below 700 in 2009, and then, you know, that huge move from 685, I think, you know, all the way up to 1900. And that's when the dollar was only correcting from, you know, about 90 to around 73. And that's the move gold made. And then we've had, since 2011, the correction down to 1045. And that's despite the dollar index now being above, you know, going above 100. When we're still way above 1,030. I mean, we got to 1,045, but that held quite well. And you see the Fibonacci retracement for the, you know, the bull market move in gold from, let's say, 254 in 2001 all the way up to 1920 in 2011. The 50% retracement of that move was 1,087. I guess we did go through that level, but in the scheme of things, it's pretty, it's worked quite well. It went down to 1,045, and you can see now that the 38.2 retracement is 1283. And look how, you know, this year we've gone above that 1283 a couple of times, around 1295. And it's really, really important level there. And that long-term trend line as well, from the high in 2011 all the way to now. It looks like we're now above that line. We have broken out in gold. I know the last few weeks have been frustrating, but we're actually above that line, just hugging that line. I want to show you, you know, that I'll show you a shorter term chart in gold, and you can see where we are exactly. Well, before I show you the really short term chart, I'll show you another chart of gold, just to show you that, you know, that we're breaking out of this wedge, you know, of this correction we've seen in gold. So since 2011, we're above that line right now. We actually, the low last week was just on the line. I know other people have different lines, but I'm actually taking the weekly chart, and I'm doing the exact top in 2011 and in 2012, and that's where it arrives. The real short-term one, you can see really clearly, that's the trend line coming from the top there. Last year we went above it, but couldn't stay above it. And as you can see now, we've been above that trend line for the last almost 2 months. Last week, you know, and I think, yeah, this constitutes a breakout for gold. I know it doesn't feel very good, but I think gold is, you know, longer term, it's looking good, these charts. So I'll finish off looking at silver, the silver chart. And this is like a 20-year chart of silver. And as you can see as well, I've drawn a trend line since 2003 roughly. We're above that line, you know, right, that line would be around 15 right now. And I've also drawn a line from the top in, you know, at $50 there. And you can see we're above that line as well. So silver's broken out as well. It doesn't feel like it, but in the long term, it has. But the most important thing about the technicals for the dollar index and gold is that, you know, gold, the dollar made a low in 2008, just above 70, and now we're around, you know, 96. And you'd expect gold to be, instead of being, you know, at almost 1,300, that gold would be below 1,031, but it's not. So I think that that in of itself is very positive, and it corresponds to Ron Rosen's running flat correction, which is a very strong correction because in spite of, yeah, because it's a correction. Usually in a bull market, the correction, you know, would be you go below the, you know, important level and the market drops. But in gold, the correction was actually up in terms of the low in the dollar index. So it's very interesting. I think it's difficult to say when it's all going to happen, but it could be within the next 6 to 12 months. I think we're going to see new highs in gold and silver. And I don't know what level that's going to be. Of course, it's going to be more than 1,900 in gold and more than 50 in silver. Where it could go, I don't know. But dollar index looking quite precarious, and gold's, you know, looking good. So is silver. So if you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to my channel on YouTube. You can also watch me on Steemit, steemit.com, and follow me on Steemit. Steemit is a really exciting blockchain-based social media website where anyone can earn cryptocurrency there, Steem or Steem dollars. by creating content or also by commenting on content, you can earn Steam dollar or Steam. So I'll talk to you later. Have a good weekend. Bye.